Good afternoon, everyone. This is Trader Tim from eminimind.com. We're doing a Monday market analysis video. Today is the 6th of November, 2017. Last week, Donald Trump named Jerome Powell as his nominee for the new chair of the Federal Reserve. Um, all in all, I think that going forward, a lot of the monetary policy and some of the changes that they make, it takes time for those changes to hit the market, if you will. The rate hikes, the rate reductions in the interest rate. When the Fed makes these changes, they're not instantly felt in the markets, other than the reaction on the announcement itself. It takes time for that change to actually hit the economy and the consumer. So, you know, I think Janet Yellen did a pretty good job, and I don't think anyone thinks that she did a bad job. Um, Whoever you want to credit to, this market boom is irrelevant. But how does this new Fed chair change? How is that going to impact the markets? Well, I don't think it's going to impact it quite as much as something like the tax reform bill might. And, going into the end of the year now, in the last 2 months, with the holidays and typically seeing a run up in the markets around the holidays, in addition to tax reform, we could have some big moves here in the markets, but both to the upside and to the downside. So we are currently sitting in, if I go all the way out, let's go to a monthly chart. Well, we'll go to a weekly first. Weekly chart, we can see the pullback that has broken its negative 23, that 24.20 from way long back ago in August, broken the negative 23 and broken the 61.8. On the weekly chart, we've gone up every single week here for now 1, 2, 3, 4, 5, 6, 6 weeks. And then we had 2 down weeks and then 3 more up weeks in here. So it's been a pretty good couple of months. With the tech earnings that have been released in the last week or two, the Googles, the Apples, the Amazons, things are really cranking out. If we look at those real quick, that really sent the market, gave a lot of good momentum after, kind of a pivotal point last week. Big gap up in Amazon, and looking strong now as we break into new highs. Apple, same thing, earnings, continuing strength after earnings, which is what we want to see. And then Google hasn't broken its little high from its gap up, but trending higher nonetheless. As we compare that to the broader market, again, those last couple of months just, basically straight up along the trend line. So I would look for that to continue. If we go down to smaller time frame, we've got an extension from highs to highs that the market pulled back to on the 25th of October. And then we have this next little pullback, a little from traditional low to high that happened last week, 25.63.50. That long, both of those longs, put us right about that 2600 level. So that's my target here. We're only 11 points away, so it should be pretty easy for us to hit that this week. And you can see how we've drifted away from the trend line here. We drift away and then we kind of move sideways, slow down a little bit, touch the trend line, and then get another lift higher, pull back or move sideways towards the trend line. We didn't quite touch it this last time, but pulled back to the 50% and then moved higher once again. So if we can kind of move up into the 2600, maybe move sideways a little bit, or keep drifting higher, up and to the right with these smaller consolidation days, there should be a lot more continued good trading to come. This morning, right off the bat, we had a low to high. It came down and just barely missed the 50%. It was within that first 15 minutes, and then it's got a retest just after that. So regardless if you took the first one or not, what it did was set us up with a nice trending morning. So regardless, if you took the first one, taking the second setup from that low to the next high, letting it pull back, market kind of moved sideways around the 50% for 5, 6, 7, 8 minutes or so, and then we got that nice quick push to and through the negative 23% target, and then started to move sideways and quiet down a little bit. But that push up into new highs was very quick and pretty clean. We've had a lot of good setups. This 80, we'll call it an 85, up to an 87. A couple points, a smaller setup, but a quick moving. Not a lot of pullback, not really any pullback in this move here. And so the markets are reacting to the fib retracements. The markets are moving quickly. There's a lot of good opportunities that are presenting themselves. Volatility staying very low in the sub 10 range. Interest rates also very low. So as we head into the next couple of weeks, taking us into Thanksgiving, it's likely that we'll touch that 2600 level. And from there, again, wanting to see if we touch and break through and continue on, or if we just touch it and then immediately get sold off or pull back. And if that's the case, then maybe look for a move kind of to take us back to this trend line. So tomorrow morning we're doing a live trading session over at emoneymind.com/VIP. And then tomorrow evening, I'll be doing a webinar specifically talking about how I use the NYSE tick in my trading for trading the ES, and how it applies to help us find good entries and exit points to really pinpoint those tops and bottoms, potential bigger levels in the market that could be very pivotal points for the day. So you can check that out, emoneymind.com. Thanks everyone. We'll talk to you soon.